All good.
Hey everyone, welcome back to Extreme Crypto's channel. Yet again today from DTA we have Adnan with some updates and news. Where's the market going? Are we going to see breakouts or not? Welcome Adnan and thanks for joining us yet again.
Hey, Drickus, thanks again for having me on the channel. Really, really appreciate it. And yes, it's certainly exciting times. We are moving closer and closer to a decision point where we'll find out if the market is going to at least track back up to maybe 40, 42, potentially 50, or are we going to break the 30K strong support and maybe see some support coming in at 25, 20, or $16,000. So we'll jump into that shortly.
Well, I won't mind to drop down there, but we might see a lot of panic coming when that starts happening.
Yes, of course. I think once that 30K floor breaks, the market will capitulate and we'll have a whole lot of people selling their Bitcoin. Unfortunately, that will be the wrong decision, but that's what most uneducated investors will do. And yeah, so once we do break, or if we do break the 30K floor, I mean, we can see figures of 25, maybe even down to 20, or potentially even down to $16,000 for a very short period of time. But we'll jump into that in the next couple of minutes.
Right, go ahead. What do you see? What can we be looking forward to?
Cool. So if we just look at it on the daily time frame, I've just drawn in this descending wedge, and a descending wedge usually breaks up, okay, rather than breaks down more often. So at this current stage, you can see we did hit the top side of the descending wedge. However, we got rejected quite aggressively. If we go down to the 12 hour, if we go down to the 12 hour, you can see we got a very big bearish engulfing candle of the descending wedge, as well as the horizontal resistance that was running across. So at this current stage, I do see Bitcoin at least coming down anywhere between 30 and 32. And if the selling pressure is a bit stronger than we anticipate, I do expect the 30K floor to break, or sorry, the 30K support to break. And at this current stage, we are looking at the first support coming in at approximately $25,000 to $26,000. Just to give an example of how I got to that analysis, if we were to just take our Fibonacci tool and layer it from the start of the smaller drop till the bottom, you can see we got rejected off the 61.8, which was expected. And we got rejected again off this horizontal resistance. Current support, next support will come in at approximately 31, 32K. If that breaks, we'll drop down to the zero mark, which is approximately 28,800. And if that fails, you can see our minus 27 is lining up very nicely with the 25, or approximately the $25,000 mark. And if we follow this current, this yellow line, you can see there is a slight confluence where we broke it as resistance, we retested and pushed up. So if the bears are very strong today, or within the next couple of days, we can see the price drop to 25. But before that happens, we have to see if the 30 or the 32K is going to break. So that's what I'm looking at in the immediate short term. But we can also have an instance, because a descending wedge is a bullish pattern. We can still come down and create some sort of a double bottom, break it, and then start our ascent to the 40, 42K mark, which is the technical target of a descending wedge, which is the start, the beginning of the wedge. However, if we do want to just jump into another chart and look at this from a different perspective, you can see I've drawn in a descending triangle. And a descending triangle is a bullish pattern. However, we do need to take into consideration that the market came into this descending triangle quite aggressively. So generally, the market will pop out from the bottom and continue going down. However, I still do believe if we manage to stay above the 30 to 32K and start working our way back up, we will find some sort of a resistance at this red line, which I've drawn in from the all-time high to the second lower high. I just drew in a trend line, which gives us this much bigger descending triangle. However, that's only if we can stay above the 30 to 32K mark and start working our way above this current $36,000 mark. Then I do see us traveling to 40, 42, and then potentially up to the 45, maybe even 48K mark.
A lot of
another thing I want. Sorry, Dricus, go ahead.
A lot of indication of bullishness coming, even though we're still on the downtrend.
Yes. I mean, in this particular instance, on the descending wedge, we can still travel within it, come back down, find support, find resistance, and kind of work our way to the 25 before we pop up, and then potentially still work our way back up to the 40K. That is still on the table. But obviously just time will tell. But at this stage, this $36,000 mark is proving to be quite strong resistance. Also, if we just ignore all the other lines I have and just look at purely, we have a massive push down, poor buyer recovery, and then another rejection. So that almost looks like a bear flag. And if we were to just measure at this current stage the length of the pole, and we drag that down, so approximately to there, that also starts indicating figures below the 25, between the 20 and the 25K mark. So a lot to take in. You can see, you definitely see the market is very confused at this stage, but we're just going to take it step by step. Don't make any hasty decisions as yet. And my advice, which is not financial advice, is to always dollar cost average into Bitcoin. That is the best and easiest strategy.
Buy the dips and sell the all-time highs.
100%. Or just purchase BTC and keep it for years to come.
Exactly. I think that's one of the biggest mistakes before you get to your next point is a lot of people is getting into crypto, but they're too much in a hurry. They get in, the market drops, and they sell, where stats shows if you keep it for 3 to 4 years, more or less every time you'll make profit at this current stage. Yes, past results is not an indication of future results, but the time frame people get into things they need to decide on, and that can make a huge difference in the long run.
I agree 100%. The thing is, a lot of people buy Bitcoin or buy any sort of investment or asset, but they don't truly understand what it's meant for, what it actually does, what does it offer. It's people generally think of the fiat gains, how much money they can make, and they don't truly understand the purpose or the function of what they're investing in. If people truly understood the function of Bitcoin and what it provides for us, there should not be an instance in any near-term future whereby you'd want to sell your Bitcoin. So that's just the way I look at it. But just one thing before I forget, you can see I got certain support zones. The first one coming in at approximately 25, which I think will hit fairly soon. If that fails, the 20K, the approximately 20K, if we just zoom out, you can see there's some previous confluence there, support and resistance. And then the 16K approximately, which was resistance and therefore was support on our way up to the all-time high. If we just go to the weekly, and I want to just explain to you why I do think we can have a scenario where Bitcoin does come down to anywhere between 16 and 20K. If I just were to just check on these EMA ribbons, and I've modified the last one, this last red one here, which is now represents a 200-week EMA ribbon. If I just were to go back into the past and look at every single dump, You can see the pandemic dump. We dumped all the way to that particular line. Yes, we did have a wick underneath, but there was no weekly candle close underneath this 200-week EMA ribbon. So we hit it, we wicked down again, and that was kind of the floor at that current stage. If we go all the way back to the 2017 bear market, you can see once we broke that 6,000K support, we quickly worked our way all the way down and found support on this 200-week EMA ribbon. We have not had a candle close underneath this 200-week EMA ribbon for the last two major drops. So the point I'm making here, if we were to have a major capitulation in the market within now or the next couple of months, you can see currently that 200-week moving average is coming in at approximately, let's just see here, at approximately 16,700, give or take. So if the market were to capitulate and we drop further quite quickly, I don't see an instance where we're going to have any weekly candle closes underneath the 16K. However, do remember that it is moving upwards. So every single week, it's moving up approximately $200. So the longer we continue chopping about going up or going down, it gives a chance for this 200-week EMA to move up. I did do a calculation earlier whereby if we were to chop a bite for the next 8 to 12 weeks approximately, will give enough time for the 200-week EMA ribbon to work its way to just underneath 20K. That will show us that 20K might be the bottom of this particular bear run or market. It depends how you look at it. And anywhere accumulating or dollar cost averaging anywhere between, I would say, 25, 26 down to that 20, maybe even 16K would be a great place to start dollar cost averaging into BTC in the event that we do capitulate and we do continue going down.
So, worst case scenario, it will be a great option to have a buy order set at the 16,300 mark and just follow the EMA ribbon 200. If it moves up, you can move your buy order up and just stick to it. It's a good indication. The last two big drops went down there, so it's an ideal position to accumulate. That's if the market comes back down to there.
Exactly. There's obviously no guarantee that the market will work its way all the way down to the 200-week EMA. Obviously, we're in crazy economic times, and there's no guarantee that we will make it all the way down to 16 or wherever this 200-week moving average is at that particular point in time. However, that's why I always advise to start dollar cost averaging in at least from the at this current stage, at least from the 25K, because that last EMA ribbon, the 95-week EMA ribbon, is coming in at that $25,000 mark, give or take. So I would start dollar cost averaging from roughly, say, $26,000, and I'll have orders. It depends on how much capital one has. Every $300-400 you can have an order, or every $100 you can have an order, all the way down to perhaps 16K. In the event we do have a massive capitulation and a quick wick that comes down and pops right back up, you won't have enough time, unfortunately, to log on and place any buy orders. So it would be advisable to have some orders there just to take advantage of that particular purchase, because if you do purchase Bitcoin roughly anywhere under 20K, you would be buying it for approximately 68, 69% and lower from the all-time high, or 69 or 70% on discount or on sale.
Exactly.
Which is the scarcest digital asset in the world, and that's bargain.
And with all-time highs in a lot of people's sites for this year even, and we know already with past results 3-4 years at least, you won't get that kind of profit if you get it correctly.
No, unfortunately not. I don't think in any other traditional market at this stage, perhaps back when Amazon and Facebook and Apple were quite cheap, maybe you could have, got an ROI of that sort, but I don't think anything at this current stage. Yeah. So, and I know I sound like a big bear at this at this point in time, but we gotta be realistic and look at it for what it is. And at this stage, it is looking bearish for the short term, not for a long term. We might just travel within this descending wedge, start going into a pinch, and the likelihood of a pop up is much higher than a pop down. But this particular, the bottom line of this descending wedge does work all the way down to approximately $25,000. So that is on the cards if this horizontal support at approximately the 30K, I would say, breaks, then yes, we can easily see the 25K, no problem. Once we do break out of that or out of this particular descending wedge and we do break to the upside, then yes, we can definitely or quickly see 40K, 42K, not a problem. And I believe that could easily push us potentially to retest the 50K, which will line up with another very strong resistance approximately over there. But at this stage, it's of course too early to say that, but we can expect some downward momentum within the next week or two, or for the next week or two, sorry.
So get your orders ready, place them, and let's see what the market do.
Of course.
I think that's the main advisable, and keep that one order down at the 200 EMA mark, 16,000 mark. If it does drop down there, possibility is going to be a flash drop. Let it pick it up and you run from there.
100%.
I appreciate your insights and analyst, and we'll be back next week yet again. Hopefully the market bounced after diving and gathering us some more accumulation.
100%. Thanks again for having me on the channel. Always exciting to be back, and let's see how the market reacts within the next 7 days. It's going to be really exciting. We're definitely at a point in time where the market needs to make a decision sooner rather than later, and we're yet to see if the market is going to push up or down.
I agree. I appreciate it. Thank you very much.
Pleasure. My pleasure.